Good afternoon, everyone. It's Coram and Shreve here with a breakdown of the action for Wednesday, February 7th, where we saw some pretty strong gains across the board, Ken, as more stocks were on the move on their earnings reports.
Yeah, no doubt. Looks like all-time closing highs for the Dow, S&P 500, and Nasdaq 100. So another impressive day for stocks. Want to take a look at Netflix, which reported earnings last month. Really paying attention to these leading stocks that could give some alternate entries coming up. NFLX. Want to take a look at Elf Beauty, which reported great earnings, but sellers were still in the stock today. And finally, in the biotech space, name we discussed on IBD Live this morning, Intra-Cellular Therapies, ITCI.
Okay, looking forward to analysis of those stocks. But first, let's take a look at the major indexes. The Nasdaq today up almost 1%, taking the lead today. The S&P 500 with a gain of 0.8%. The Dow up 0.4%, and the Russell 2000 lagging a little bit, still testing a key level, down some 0.2%. So, Ken, this rally is keeping on rallying.
Keeping on going. Yeah, I think it's a really a great environment for stock market bulls. Some of the things we've been talking about on IBD Live is that it is getting more difficult. I mean, stocks are so strong that a lot are well extended past proper buy points. Even the indexes are starting to look a little overbought up here. So I think there's a lot of yellow flags out there, but we're just seeing a lot of great action underneath the surface. So you want to be careful about chasing stocks in a market like this. And if you do have some cash on hand, maybe you've been taking some profits. Be patient, because if we do get a pullback, that's when you'll see some new setups emerge. But the market just seems a little risky now, just because we've run up so much and the number of extended stocks, but a confirmed uptrend is still looking quite strong.
Yes, it is. Okay, let's take a look at the S&P 500, getting awfully close to that 5,000 level, Ken.
It came to within less than a point. I think it was 4,999.89. It hit a high. So yeah, just barely stopped short of that 5,000 level. We'll see if it ends up being resistance. S&P didn't have any problems at all plowing through that 4,500 level right around the time the market was following through and confirming a new uptrend here. So yeah, didn't quite touch 5,000, but another all-time closing high here.
Okay, let's get your thoughts on the Dow. Blue chips still participating.
Yeah, the Dow's recent high was 38,654. It did make a new closing all-time closing high today as well, even though it closed a little bit off highs. So seeing some decent leadership in the blue chip space as well. It's just that small caps are still kind of struggling here. There's pretty big financial weighting in the Russell 2000 index. I think financial services is the third or fourth highest weighted sector in the Russell 2000. So still kind of waging a battle at the 50-day moving average is the Russell 2000. So would be nice to see this get going and really make a good case for support and start a new uptrend here. But the Dow, S&P 500, and Nasdaq are certainly carrying a big load here.
They sure are. Okay, let's take a look at some stocks of interest. Here's a look at Netflix, that powerful move on earnings a couple of weeks ago, and it's really quieted down from a price perspective and a volume perspective, and really not wanting to give up ground on that big earnings move.
Yeah, rather than kind of aggressively, if you have cash and you're looking to put money to work, again, actionable stocks are getting tougher to find. But so you want to keep a watch list of stocks that are behaving right. I think Netflix, obviously, its earnings report was really good last month, and if we just look at the weekly chart here, this is just a great example of what kind of tight trading after a big weekly gain looks like. So maybe this will be a 3 week week's tight pattern by the end of the week. Really strong stocks can show some tight weekly closes after a big move like Netflix made. So I think this is a good one for the watch list. They are, the company is, even though it's a mature company, they are finding new growth opportunities. Whether it's a new ad supported subscription tier, which has been popular. And so they've just been doing a real good job executing. Reed Hastings has been CEO there for quite some time, and still think this stock has a lot of potential.
Okay, next on the list, let's go to Elf Beauty. Take a closer look at the daily chart here. So a bit of a battle with shares today, ultimately closing down about 4.9%. At one point earlier on in the session, it had erased a good portion of that decline, Ken, but a little bit of selling pressure here with Ulta Beauty. Not Ulta Beauty, Elf Beauty,
Elf Beauty, yeah.
despite a really good report.
It was a really, really good report. Anytime a high multiple stock like Elf Beauty shows accelerating revenue growth, normally the market rewards that, and it did for a little while today. So it was disappointing to see the stock close down in the bottom half of its range. You can see volume was heavy, so maybe some profit taking here. But despite a decline of nearly 5%, Elf held right at that 10-day moving average. So it's certainly not a broken stock from a technical perspective. Again, it was a disappointing close. At one point, it had recouped all of its losses and was pretty much flat from yesterday's close. So we'll see how things shake out up here. Elf is probably going to start to consolidate here after such a big run, but the huge revenue growth was impressive. And then they also, a lot of these stocks need to come up with good bullish guidance, and I would say the revenue guidance for its current fiscal year 2024 was very bullish. It was almost 100 million above their prior guidance. So they still seem to be executing very well. It's a leaderboard stock, and we'll continue to hold it here.
Yeah, still above that 21-day line. Seems like a hold for those who own, unless your style is to be a bit more aggressive on the selling here. But still looking good overall. I agree, Ken. Okay, last but not least, let's take a look at ITCI. This is a biotech stock setting up. I'm seeing a round number of 70 here, Ken. That would be great to see the stock get above.
Yeah, getting a little resistance for the past 5-10 days. It's been kind of trying to get above 70 without much luck. But I do like the accumulation distribution rating of A minus here. Anytime you're looking at stocks with accumulation distribution ratings of A minus, A plus, you're looking at a stock that's showing pretty good price and volume trends, and I would say that is the case with ITCI here. Getting some early resistance, like we said, at 70. But if you look at the weekly chart here, it's a base that's forming right along the 10-week moving average. So I don't think this one is ready yet. It does have on the weekly chart that relative strength line is lagging. So we'll look to see if this stock can see some additional higher volume gains that will continue to help the accumulation distribution rating, and maybe if it can get back above 70, it could retest that prior high. But again, a biotech that is looks like it's right on the verge of profitability. The big revenue growth in recent quarters is because of only one drug. It's called Caplyta, which is used to treat schizophrenia, bipolar depression. But they looking at a lot of additional label indications for Caplyta. So I think there's a growth story that's still intact here. So we'll see if this base can shape up a little more. I don't think it's ready yet, but do like the relative strength and the revenue growth, and it's got excellent fund sponsorship as well.
Great. All right, Ken. Well, thank you so much for that analysis, and thanks everyone for tuning in. That is it for today. We'll see you tomorrow morning on IBD Live, investors.com/IBD Live for all the details. We'll see you there, and we'll also see you right back here tomorrow at the close.